So in this video, we want to learn how to mark the chart from the weekly down to the 1 hour vis-a-vis top-down analysis. So the first thing I'll do, in the previous video, we talked about how to mark the highs and the lows and the previous highs and low correctly, and also the CM time baseline to the settings. So in this video, we'll be talking about how to do top-down analysis from the weekly time frame down to the 1 hour time frame. Now let's get right into it. So the first thing I will do is I'll switch off the CM time based indicator. You don't need it for now. I'll move my time frame to the weekly time frame. Weekly time frame. Now what am I looking at for? I want to mark this supply and demand areas on the weekly, daily, 4H, 1H, and so on. I want to look at the last candle before a bullish move or a bearish move. For example, this candle here is the last bearish candle before this bullish candle. So I want to mark it. And another rule is I'll make sure that the candle has not been touched, has not been used. This particular candle here, let me make the color red so you can better see it. This particular candle here has touched it, so it is no more valid. It could be valid in the future, but for this particular time it's no more valid. Why? Because it has been touched, has been used. So I'll look out for areas where the market has not touched. Let me give you another example. This last candle before this bullish move, this other one here, this last candle here before this bullish move have been used by this area. Remember, the market came in and went up, so I'm no more marking areas here. This for demand. Let me look for supply areas. This one here, this supply area here, this last candle, bullish candle before this bearish move has been used. It has been used several times. It has been used here. It has been used. Let me turn this thing upside down. It has been used here. Also, let me clone it for the purpose of this video. It has also been used here. It's also been used here. It's also been used here. So this line is no more valid for me to mark my supply and my demand, in the sense that it has been used. So I will not mark it. I will look out for areas where the market has not been used. For example, this one has also been used. Let me check this one. This one has also been used. You see, also been used, but this one has not been used. This one has not been used. This one here, not been used. This one has not been used. So in the future, the market might likely come back to this particular area. It's either it will retest, it will break and retest, or it will bounce off from this area. So it has not been used, but these other areas have been used. So what I will do is I will take them off, because since they have been used and this other one is far away from the current price, so there's no need marking it, because it's not relevant to the price for today. No more relevant to the price for today, so I will take it off. I will take them off, taking everything off. They have been used. So since I'm looking at the weekly time frame from GBP USD as it stands today, I'm not seeing any valid area of supply or demand that I can mark. Then I'll go to the daily time frame. I'll go to the daily time frame. All right. I'm seeing one area that has not been used on the daily time frame. A supply area. So this area here, oh, I think it has been used. So it has been used. It has been used by this area. Let me make it perfect. It has been used. So it has been used by this area. But we can still mark it as our daily supply. Daily supply. Because the market could easily go back to those areas and continue selling. Then here is my daily demand. This candle here, my daily demand. I'll mark it as daily. Mark it as daily. So this is the next area the market is heading to. Since the market has been bearish, this is the next area the market is heading to. This daily demand. So anything could happen to the daily demand. It could buy off, or it could break, retest, and continue selling. This is the next area of our demand. This is the next area. If you look at it, this is the next area of our demand. The market could sell from or buy from, case may be. Now I'm done with the daily. Let me go to the H4 time frame. Let me look at H4 time frame. Okay, I'm seeing a candle here. I can mark as my H4 supply. Remember, supply marking from up, supply marking from down is demand. Supply, H4 supply is the last supply. H4, of which the market has used both of them. You see, the market has used both of them here. Here, market has used it severally to sell off. That's supply. Market has used it severally to sell off. So let me take it out. Then let me look at this 4H. All right, so we have a 4H demand here. H4 demand, of which the market still we use in the future. Instead, the market comes down to this H4 demand and buy off or sell off. It depends on what it will do. So let me go to the 1 hour. Let me go to the 1 hour. Now this is where it becomes very trickish. Now the 1 hour. This is our entry time frame. We start looking for opportunities, start to buy or to sell for the day. So I'll turn on back my indicator on the 1 hour. Now this is what I normally do. So I'll look out for the first candle that comes out from the Frankfurt area, and the candle is a 6 a.m. candle in the morning. 6 a.m. candle in the morning. So if your settings is not giving you this, then there's a problem. 6 a.m. candle, the first candle that comes out from the Frankfurt section. So I'll mark it as my low. I'll mark it H1. I'll clone it. Now this is where the strategy of entry comes in. So I'll mark it as my high, the H1. I'll mark the up and low, and wait for either the up to be broken. If the up is broken, I'll look for buys. If the low is broken, I'll look for sells. Now in this case now there's one thing about this strategy. If the low and the high is broken, that day is a no-no for me. The trade is invalid. One part must always be broken, not the two parts. If the high is broken and the low is broken, it's a no-no for me. That day is gone. I'll not trade it. Why? Because it doesn't fit in my criteria. My criteria state that one part must be broken, not the both parts. If it's breaking above the H1 6 a.m. H1 candle, then it must break above. It mustn't come back down. If it's breaking below, it must break below for a sell. It mustn't come back up. That is the main thing about it. So let me take this as a case study. But for me, I'm not trading this type of pattern. If you see this, I'm not trading it. So let me go to the 15 minutes time frame. 15 minutes time frame. This is the M15 that has not been used. If, for example, it's according to our plan, M15 that has not been used, so I'll be expecting the market to come back to this M15. Let me check the M5. So the M5 in confluence. Let me go back to the M15. Can I mark it correctly? Yes, I did. The M5 okay. Alright, so if I'm to sell this market, I'll be waiting for the market to retrace back to this area. Then targeting the retracement, stop loss just a little bit above the high, let's say 10 pips, because of the market volatility. Let's say 10 pips. Now I'll be looking to the order to activate my sell limit or buy limit in order for me to sell this market. So I'll be looking for something like this. If I'm to sell this market, I'll be looking for something like this. So the major thing about it is we are looking for areas which the market has not been used. Areas, supply areas, demand areas where the market has not been used. If you look at this area, the market has used this area. This area, the market has used it. So this area, market has used it, so I will not mark it as my supply. But this other top area now, this area, the market has not come back to this area. So let me make it black. The market has not come back to this area. This area like this now. Yeah, I'm looking at it. They'll not come back to this area, so I'll be expecting the market to do this kind of thing. Make this one perfect. I'll be expecting the market to do this type of thing. Come back here, then sell off. So if it invalidates this place, break it above, that means the market is no more selling, buying. But if you look at the general trend have been very, very bearish. Remember, we've broken below the low of the day. So the market has been very, 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 very bearish. So we are looking to take a sell if it comes back to this area. But the reason why I wouldn't want to take this trade was because from the rule in the strategy, if you look at the 1 hour, the market broke above with this small wick. the market broke above the first candle, the 6 a.m. first 6 a.m. first 1 hour candle on the Frankfurt. The market broke above and below. So I didn't mean the market did not break above, it just break only the lows. Then I'll be comfortable looking for a sell. But since it broke above and now broke below, I'm not taking the trade because it doesn't meet my criteria. Even if it plays out, it doesn't meet my criteria.